I would say the asset manager that really target residential on a European scale, that there are a few of them, and they really are getting more open. So the competition for assets is increasing across all the markets, no matter which market you're looking at, despite possibly some niche segments where you can be a first mover. And I think that these are some of the opportunities, but given that the risk aversion is still very high, despite any kind of stability you get with residential cash flows, it was very hard to persuade someone going for Irish residential 2 years ago. But if you were one of these movers 2 years ago, you had an extraordinarily great return at that time. You could see that it was happening, but if it gone wrong, everybody would have said, yeah, it's expected. I think that's the big danger currently in resi, that you have the opportunities in the markets out there, but it's very hard to persuade investors going there. And the other thing is possibly to comment on Berlin shortly. I think the Germans are not very good at estimating the potential of their capital city, because if you look what happened in the last 15 years, the Germans are very skeptical about their own capital city due to a lagging economic base. But maybe the people from outside are better, because looking at the US, for instance, look at Washington, D.C. and the economic base of Washington, D.C. It has no economic base in this sense. It's the political capital of the US, but it's a very established office, retail, and I guess also residential market. And the yield levels are competitive with the other big cities in the US. And Berlin is still lagging this development compared to the other 6 of the top 7 cities in Germany. So I think there's still room for Berlin to grow and to move forward. And that's possibly something that the Germans have to learn from outside, because we're a little blinded from the history, just looking from Germany, from the German perspective on Berlin.
Okay. Yeah, go ahead.
Yeah, but that's an interesting thing. I mean, I totally agree what you're saying, but then you have to figure out what's going on today. And this is, I mean, if you see who's buying into residential today, this is definitely not the guys who bought in after 2000. I mean, today we talk about, let's say that in a very clear way, about a very boring asset class. You know, German residential is super boring. It's not volatile. Does it bring us opportunistic returns over the next years? Definitely no. You know, that is what we are talking about. You know, and coming back to what you said, I mean, beginning of 2000, totally agree. All the Germans, especially the old traditional Germans, you know, for instance, like Patrizia as well, they didn't buy. Yeah. They didn't buy into such a market in 2004. It was these, you know, the guys we didn't even know the name before that, you know, and they bought into that. And what we've seen today is that they were looking for cheaper pockets to sell into, and this is exactly what we've seen. We sold approximately 80% of our residential units. It was approximately 40 or 45,000 we had. Very, let's say, ugly residential stuff, which was not touched before. 3-4 years ago, everyone would have said, "Oh, this is not the right location." You know. Today, you see these listed players, huge appetite, low return profile. Oh, that's great. We go for. This is exactly where we are today. And having said so, it's not that I'm against this sector. The only thing what I want to point out is we talk about different returns. We talk about stable income. We talk about 3-4% returns, which is definitely okay. And there are some others looking for some super special things. And maybe just to add one sentence, if you see all the lack we have on residential units and on residential in general, we definitely do not have a lack on super luxury residential. We look for normal units, you know, payable, where you can pay the rent. Who's going to build that? Who's able to do that?
The question is, can you build it with the regulation and the land prices?
Yeah. So that is the real lack we have, and there I do not see any solution currently. You know, this is pretty, and especially now with the migration thing, you know, but they are not asking for this 20 euro plus apartments. They ask for the old Berlin rents. As we bought into GSW, the average rent was €3.90 per square meter. You know, today is approximately 7 or 7.50.
Ralph has a point, you know, it's about the return expectations of foreign investors coming into the market. If you want to get double-digit returns, if it's unlevered, it's very difficult. Despite the fact that now we see the lagging of the chartered surveyors, so it's good timing if you invest right now into market. But next to that, regulation is very important, as Mark has already pointed out. I think Germany is going the other way than the Netherlands, for instance. We're freeing up the residential market and you're curbing the residential market. I don't know what that will mean on your side. Maybe Marcus will comment on that in terms of the Mietspiegel, with the Mietbremse, with the returns. But in the case of the Netherlands, is you see the same type of market, but quite a big opportunity to develop and also buy this affordable housing in cities. And that will bring you high single returns. Whether you add leverage to that, that's up to you.
But being an economist, Jaap, I think that's the interesting point. You have a real-world experiment, what works at the end.
Yeah.
You never have this very often, so you can see how it works out. But I think the housing shortage is the overriding problem in both countries. Yeah. And the question is, does regulation build any kind of new houses?
Yeah. Well, that's rhetorical.
I think there's also like one point to add. What we've seen, like for the investors which invested like in 2000 and still like until 2009, I would say, those investors like look, they are still investing in the German market, and they regard like German residential more as a core and boring investment. But those investors, they move today like to the Netherlands, to Spain, and focus to other markets and look for those opportunity and look for those double-digit returns if possible. So they have made the positive experience here in Germany. They've done their business plans, and they have today they know how the market works, and they modify it like to the other countries. I think that's what we currently can see in the market.